Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, August 23rd, 2019. Just wanted to get a brief video out there with some levels to watch on the markets, along with my thoughts. We're in a period of elevated volatility, even though volatility has abated and over the last few sessions in this somewhat tight trading range compared to what we've seen here, and that's reflective, of course, in the VIX dropping. This is higher volatility, and then lately we've seen this. We're still off the lows, and more importantly, we're coiling now in a this is a symmetrical triangle pattern. I just added this trend line since I posted the last update this morning on QQQ. I figured this may come into play. I like to see at least 3 reactions to help validate a trend line, and this one only has 2 so far. You can see QQQ making these 2 lows here, but it's worth watching. And symmetrical triangle patterns are indecision. They can break either direction, and you need to respect it. So point being, again, we have a lot of energy here coiling in this trading range. Remember, that's bounded by the top, but lately we're also bounded by the top of this trend line, and that's dual resistance levels, very important levels that if popped should, I would imagine, trigger quite a bit of stops on the shorts like I talked about recently. I don't think we really got a big one there, and also bring in some longs purely based on the technicals. Whether it fails or not, I put pretty good odds that it might, but again, you have to respect it because it might not. And even if it does fail, they might run it for a while. So again, I want to get this video out because the markets can and often do move very fast during, especially when volatility is expanded like it has now. During these periods of low volatility, I talked about it. I said, don't fall asleep at the wheel. It is what it is. I do the updates every day. My voice was more monotone and drab because it's, you almost have to, there's not a lot to report when the market's inching up like this. But as I said, from these periods of extreme low volatility and price compression come the big moves. And so I said, don't fall asleep at the wheel. And that's what we got. So right now, we've already had volatility expand, but it could expand even more, is what I'm trying to tell you. And, for the time it takes me to, both manage my own positions, if I have to, cover something, close one position, open another, across various accounts, and then also to screenshot a chart, make some annotations on that chart, try to identify if there's any levels I missed before, and of course get those charts out to you. It can take anywhere from 5 to 10 minutes at minimum, to usually quite a bit longer, and of course these videos as well. So my point here is I want to get these levels out, what can happen, so you can react. And one of the things, for example, I've shared my thoughts where I think we're going, but again, until we break out of these ranges, it's anybody's game. So I still think, and I'm still favoring the downside resolution. And as I posted this morning, I think it will probably come fast if it comes. So the levels I'm watching right now to follow up with the post I made this morning, it's about just a little shy of 186 on QQQ. That's that 185.95 level. I've had it there for weeks since we've been in this trading range, and we hit a low of 185.94 today. I give you my word, that's not mere coincidence. As I told you, when volatility expands, traders flock to technical analysis. That's all they have to work with. So today, the big drop in the futures, you're not seeing it here, we'll get to that in a second, was China slapped on the latest rebuttal or retaliation from China with some new tariffs, and that knocked the markets down. But enough to the point where traders said, okay, that's a key support level. So where I'm going with this is that is the big level to watch. That's why I color coded it yellow. I think it'll go, but like I always say, support is support until unless broken. And when I posted the update this morning on the futures, I expected a bounce. That coincides with the level I gave you on the NQ, the Nasdaq 100 futures, and said from that point, I showed arrow breaks. I don't show all the squiggles, but I said I expected a bounce, and then we go on to break it. Now if we do, as I said, I think the selling will start to accelerate in these levels. Although I had arrow breaks at the other support levels, I think once we get down to the bottom of that trading range, this thing's ready to pop sooner or later. We could continue to coil in that triangle, or move between the highs and the lows, but be prepared. That's I guess the point of this video. It can happen fast. And on that, now on a related note, I've seen an unusual number. Haven't had a lot of swing trades, and the reason is, and I've said it before, if you're new to the site, it's been a lot of this, quite a few this year. I've done a lot of unofficial trades, but as far as official trades and even unofficial trades, you notice I'm keeping it very light. I'm not doing a lot of sector analysis. I'll update the commodities, other things that I think are good alternatives to the market, gold, treasuries, whatever it is. But individual stocks and sectors, here's the thing. The stock market, or the expression is, all ships are lifting a rising tide. So if the stock market is going up, the S&P, the QQQ, money's flowing in, it tends to lift most or all of the 11 sectors in the S&P 500. And so when we're in this indecision kind of triangle pattern that's can and will break either way, it gets tough. Now, this is the way I favor, so I probably should do a better job of getting out some short trade setups, even longs for those of you that are bullish. That's something I also try to do on the site. Despite my outlook for the market, I strive to keep a balance of both long and short trade ideas, knowing I'm going to be right, I'm going to be wrong at times, and so therefore my views might be different from yours, and you might be looking for long trade ideas. And of course, when I say longs, now I'm just talking things that are highly correlated to the stock market. What I mean by that, like for example, it would be very hard for me to be bullish on Apple but bearish on the stock market, because Apple is a top component of both S&P 500 and QQQ. So when I say, I'm hesitant right now to put long trade ideas, I'm talking about things that will probably be affected if we get broad-based selling. And on that too, I'm kind of going off some tangents here, but these are just kind of trading tips, things I've learned over the years. During an uptrend, a normal uptrend, when the market's stair-stepping up, you can get, some sectors and individual stocks which you can make money shorting, because the market tends to move up slower than it moves down. Actually, this is a bad time frame to even show you. You go back for a long time and you'll see that the market tends to grind up. And here's an example. You can see what I'm trying to get at. It tends to drop a lot faster than it falls. So right there, in just a period of that was how long? Roughly 3 months. It wiped out. Using the tool down in the pop-up box will show you the amount of time you wiped out gains that took 1.5 years to get. So 1.5 years of gains. In other words, all of this right here was wiped out in just 3 months, and that happens time and time again. Right here, you wiped out in just 1.2 months. At the lows, you wiped out 1.5 years of gains. So where am I going with this? The point I'm trying to make is, during a bull trend, I will actively share short and long setups. During a impulsive sell-off, because stocks tend to fall faster, and then you get a lot of forced selling. People are shorting the indexes. They're pulling money out of mutual funds and ETFs, so then the indexes are being sold. And what that means is everything in here, all 100 stocks in QQQ, all 500 stocks in SPY, are coming under selling pressure because of redemptions in the indexes. The indexes have to sell proportionally those stocks. So therefore, in an impulsive move down, it's a lot harder to find longs, long side trades, stocks that are going up. So therefore, during corrective periods, my focus goes more to the broad markets. It's a lot easier to just, hyper focus on QQQ, SPY, things like that. And then when you return to a normal uptrend, then you can, I think that's where individual security selection and sector analysis tends to shine. Okay, and so back to that. So what we've had recently is just a lot of stop hits, like on the semiconductors and QQQ, because of this. This you get chopped to pieces. This was a big range. Now the volatility is compressed a little, but we're still within the range. So while I'm tempted to add back the semis and all that as official trades, to do so while we're still in the range, it's just going to entail an increased risk of it being stopped out. However, the point again for me doing this video is if you share the mindset or you think that we might be going down, but let's just say you want to hold off. The same reason I'm holding off on these official trade ideas, to see which way this goes. If we start to break these levels that I just showed you here, and we start to get that impulsive selling, and then we, let's say, smash right on through there, I think we're going a lot lower. So you might think, well, the market's dropped 2-3%, it's too late. But I think if we smash down through here impulsively, take out those, maybe that uptrend line, probably do the trick. Maybe even 185, today's lows will do the trick. I wouldn't be surprised. Things could happen very fast. And so therefore, before I can get an official trade out, you might want to jump back into, or a lot of you I know gave it a little more room, like on the semiconductors, things like that. And likewise, things can move fast to the upside. So if you're in those, like I said, I think the odds are pretty good that if we pop to the upside, the move will be limited, and then probably reverse or at very least back test. But anything is possible. And again, there's a lot of energy building here in this coiled spring. So if things go to the upside, let's say the Washington puts on the full court press, you have Powell just getting uber dovish, DC putting on whatever they can do to gun the market up, whether it's in rhetoric or actual something that they due to Trump's waffled around lately on he was going to do some more tax cuts the other day. The following 2 days later he said, I changed my mind. And by the way, guys, I've been critical. I've made a few comments that of the president. I've asked in the past to keep politics off the board unless it relates to the market directly. So please keep opinions, anything that might inflame some arguments in the trading room, others that, no matter what, at any point in time, you're going to have somebody that's on the other side of a position of you. So religion stays completely off the board, and I thank you. There's none of that in there. Politics, it's tough because in a normal market, and going back and throughout time, you've never in history had a president that's criticized the Fed. The Fed is supposed to be an apolitical, nonpartisan institution. And so, Trump has kind of broken all the rules. And we've never had a president that fires off tweets to directly intervene with the market and try to gun the market up. That's a first. So therefore, there is, in this case, a point to bring these things up if it has an impact on the market. But again, there's a difference of bringing that up and then making disparaging comments, and myself, I might have been guilty of that recently. Again, just has to do with the policies of the market policies and manipulation. But I ask that you please keep that, do your best to keep that to a minimum or eliminate the any potentially inflammatory comments in the trading room. All right, so let's move on. That's it. These are the levels. So far, they defended 185.95 like a champ. SPY, I gave you 289.89. That's at right there. It's actually a little bit above there. The bottom of this candle was low, 289.95. Okay, right about there. So these are, I think, pretty important levels. And again, so we're at the top of the trading range here. And there's the trend line's a little bit different on SPY. SPY made almost an equal low. And we still have the highs not too far above. So let me just color code this because also that's a very important level as well. Make that, let's just say blue. And of course the downtrend line. So these are the salient technical levels to watch at this point in time. And we're compressing. So bigger picture is the recent lows. And maybe those trend lines I showed you there could do the trick. I think they would. I think if we get anywhere close to these lows again, I think we'll just come on right through them. So I think a break of the trend lines will most likely do the trick. But until then, it's all conditional. Support is support until unless broken. So far, we held that level. So far, we continue to get rejected here. So now, what you can see here is I'm drawing, this is called a descending triangle pattern. And so that's what we're looking at right now on SPY and QQQ. Let me show it to you on QQQ. It's that same yellow line, and these are technical patterns. You can Google the term, and they're inherently bullish, although they can break either way. And when they break to the downside, they're just as bearish. So you have to respect whichever way this breaks. I'll give the market points. It already held that level like a champ. I told you earlier I expected a bounce when I posted QQQ. I'm sorry, NQ, when I posted the futures this morning, we had a brief, what I call momentum fueled overshoot. Momentum fueled overshoot, if you're new to the site, it's just a term I've made up when you have a lot of velocity coming down to a support level or up to a resistance level like this. And that's the resistance right there that I expected us to stop. You tend to overshoot it. In fact, I would expect it. I would almost put money that you would overshoot it and then come back in. You're not going to stop cold at it. The analogy I use is a pitcher, smoking a 95-mile-an-hour fastball. It's going to hit the catcher's glove, and it's not going to stop there. The catcher's glove is going to snap back, and then it's going to spring back forward to the point that the ball hit it, or even a little more. And that's in my head. That's the visual I have. And so that's all that was. So this was, again, a reaction off 76.50 almost perfectly. You can look at that. All you see are those little candlestick bodies there. The tails or the wicks. And as in the usual form of this market, quite the impulsive reaction so far. A little more impulsive than I wanted to see. I had us going up here to about 76.96. That would have been was my bounce target, where I figured we'd hit this level this morning, bounce, and then go on down. So not crazy about this. I know Jackson Hole's going on. Maybe Powell, I don't know if he's finished talking yet or not. But again, this is volatility. Things move fast. These are the levels to watch. And let's zoom back out again. The technicals to me indicate we're likely going lower. We had the divergent high here in QQQ, SPY, ESNQ, all the large cap indexes. And as I said before, maybe we could extend that divergence. If that would mean at this point we'd have to go and make another high. That would be that false breakout scenario or failed breakout where we pop, as I said, about from where we were the other day, a little more than maybe about a 1% or so move up from the other highs. Remember, this is the top of the trading range here. And so this still is my most bullish of the two scenarios, and it still has us going a lot lower. Anything more than that, then I'm wrong, and we're probably going to go on and run at and take out the previous highs, would be my guess, if we can break out and hold above that level. So that's where we're at. Those are the levels to watch. And as I said, things can and often do happen fast when volatility is expanded and you're in these type of this is just a huge, very important battleground, I think, between bulls and bears. And so, the winner, I don't want to say winner takes all, but, it could determine the next major trend in the market. And there's your uptrend line or larger triangle pattern for the futures, NQ. And here's that, shorter term price channel or trading range, I should say, that we're in right now. So, and the top of that, again, matches with the top of these other ones. That's it. And again, we break one way or the other, things could happen fast and a lot faster than I can add back any trade ideas. So, if you are of the bullish mindset, there's some levels to watch that will, bullish technical event number one, obviously, is a breakout above the recent highs. Not just a little pop, but a solid breakout. And then, of course, a break above 78.18. And bearish event number one from here would be the next bearish event would be a break of 79.50, impulsive break, as well as those levels I showed you on ES. And then, of course, each of the additional support levels below. So if you plan to add to any shorts or initiate any shorts, those are levels to watch. And likewise, if you plan to cover any shorts or start to go long, longs can also buy pullbacks to support as well. So I share these levels. They could be traded in many different ways. One thing is hard to argue is that these levels have not worked. They that I think one would have a hard time saying that technical analysis doesn't work. It's not, you can't predict where they go, but you can say, with certainty, but you can say with certainty this is an important level that has seen buyers step in now on the last of the three pullbacks to that level, and so therefore it would only make sense that if we break it, that would be bearish. All right, let's wrap it up here. I'm going over and over and over, but these are the levels, and I just wanted to again bring up a couple patterns to watch shorter term, and that's that descending triangle pattern right here. Same story either way. At the break of the top of that was also a break of this larger symmetrical triangle pattern. But if you break the bottom of the range here, then you have that is support, and you can see that uptrend line for the triangle pattern comes in right about the 75.55. So that would be a big level to watch if we break to the downside, and if we do, then that would be, for example, sell signal number 1, sell signal number 2 if broken. And then of course this is your next support. All right, we'll wrap it up here, and like I said, I'll work over the weekend to try to, I've done a lot of analysis on the broad markets and given you a lot of levels, places we might be heading. By the way, on the trades, like for example SQQQ, or I should say, I'm sorry, QQQ or SOXS, the semiconductors, and those trades that stopped out, TVIX for example, I've given that was an unofficial trade recently. I gave you levels. Those levels all still hold if that bearish scenario plays out. Nothing's changed there. I'm talking about the additional targets that haven't yet been hit. So again, whether I add TVIX as an official trade anytime soon or not, the same levels that I shared before, this one was effectively hit. We came close enough, and as I told you, I always, on official trades, I always set my sell limit orders. I take profits just before the actual resistance, and there's a good example of why. Sometimes you reverse just shy, and the bigger the swings, when you have a security like TVIX that trades, that can go up 10-20% easily or more in a day, you don't try to come within a penny or two. You give it maybe a percent or two within each of those levels. So I just wanted to point out that all those targets remain, or actual resistance levels, potential targets, remain valid for now, and so does the breakout. TVIX. And this is why I remain, still bearish on the market now. We had the breakout of the small wedge. We broke out above the larger downtrend line. We came in for a near back test so far, and we're still above it. And again, it's these divergences. This is what shapes my longer term. I'm talking this whole video I've been talking about little micro levels, 60-minute charts, where the next 0.5% or 1 or 2% of the market might be. This and this is what shapes my opinion as to where the next 10 to 15% or more in the market might be. It's these divergences that keep me favoring the downside break, because we had a divergent high, just like here, divergent high, divergent high, divergent high. So therefore, that's what I'm looking for. And I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great trading day.